Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the 4 best growth stocks to buy in the new Nasdaq bull market. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Since the beginning of this decade, Wall Street has been a hub of volatility. While 2024 has started on a high note, it followed 4 years of alternating bear and bull markets. Among the major stock indexes, none has been more volatile than the growth-focused Nasdaq Composite. In 2022, the Nasdaq was entrenched in a bear market, losing 33% of its value by year's end. However, since the start of 2023, this innovation-driven index has surged by 60% and reached a new record high. It's clear that the Nasdaq is in a bull market, although it's still relatively fresh. Even with the Nasdaq Composite hitting an all-time high last May 15th, there are still plenty of bargains to be found among growth stocks. Investors willing to seek out these opportunities can find some amazing deals. Here are 4 growth stocks you might regret not buying in the new Nasdaq bull market. Number 1. Meta Platforms, ticker Meta. The first standout growth stock that investors should consider in this young Nasdaq bull market is Meta Platforms, the social media giant. Despite recent concerns on Wall Street about Meta's increased capital expenditure forecasts, the company has several strong competitive advantages that make this short-term issue less concerning. Meta Platforms is the parent company of some of the world's most visited social media sites, including Facebook, Instagram, WhatsApp, Threads, and Facebook Messenger. In the first quarter alone, Meta's family of apps attracted 3.24 billion daily active users and nearly 4 billion monthly active users in the last quarter of the previous year. This vast reach makes it an indispensable platform for advertisers. Meta benefits significantly from extended periods of economic growth. While advertising is cyclical and recessions are inevitable, periods of economic expansion last much longer than contractions. This means that long-term investors in advertising-driven companies like Meta, which generates almost 98% of its revenue from ads, often see substantial returns. Furthermore, Meta's ability to invest heavily in future technologies like artificial intelligence, the metaverse, and augmented virtual reality devices is supported by its strong cash flow and substantial financial reserves. As of March, the company had over $58 billion in cash equivalents, and marketable securities, and generated approximately $19.2 billion in net cash from operations. This financial strength allows CEO Mark Zuckerberg to invest in long-term growth projects without immediate returns. Currently, Meta Platforms stock is a great value, trading at 13 times the consensus cash flow for 2025. This is a 12% discount compared to its average cash flow multiple over the past 5 years, making it an attractive investment. But before we proceed to the next stock, here's a question for you. Do you think Meta's investment in the metaverse will pay off in the long run? Drop your thoughts in the comments below. Number 2. Fiverr International, ticker FVRR. The second growth stock to consider in the new Nasdaq bull market is Fiverr International, an online services marketplace that has been making waves despite some concerns about the impact of artificial intelligence, AI, on its performance. Fiverr has managed to position itself favorably, leveraging several key factors to its advantage. One of the most striking aspects of Fiverr's journey is the significant drop in its stock price, more than 90% from its all-time high. While this might initially seem alarming, it actually presents a unique opportunity for long-term investors. The current macroeconomic environment is highly favorable for Fiverr's sustained success. The post-pandemic world has seen a dramatic shift in work patterns, with a substantial increase in remote work. More people are now working from home than ever before, and this trend shows no signs of slowing down. This surge in remote work plays perfectly into Fiverr's business model, which connects freelancers with clients seeking various services. Fiverr's platform offers a significant competitive advantage through its emphasis on transparency. Unlike many of its competitors who allow freelancers to price their services on an hourly basis, Fiverr requires freelancers to provide an all-inclusive price for their tasks. This approach to pricing not only simplifies the transaction process, but also enhances trust and satisfaction among buyers. The clarity and predictability offered by this pricing model have been instrumental in driving up the spending per buyer on the platform. Another compelling reason to consider investing in Fiverr is its impressive take rate, which is the percentage of revenue it retains from transactions on its platform. While most competitors operate with a take rate in the mid to high teens, Fiverr has managed to achieve a take rate of 32.3% as of the end of March. This represents a significant increase of 190 basis points from the previous year. The ability to maintain such a high take rate, combined with the growing spending per buyer, underscores the strength and efficiency of Fiverr's business model. In addition to these operational strengths, Fiverr has also demonstrated a commitment to enhancing shareholder value through its share repurchase program. The company has announced plans to buy back up to $100 million worth of its shares. This strategic move is expected to accelerate the growth of its double-digit adjusted earnings per share, further enhancing the attractiveness of Fiverr as an investment. In summary, Fiverr International stands out as a compelling growth stock in the current Nasdaq bull market. The company's strong fundamentals, combined with favorable macroeconomic trends and strategic initiatives, position it well for long-term success. As remote work continues to grow and more businesses turn to freelance platforms for their needs, Fiverr is likely to see sustained growth and profitability, making it a worthy consideration for any growth-focused investor's portfolio. Number 3. Biomarin Pharmaceutical, ticker BMRN. The third exceptional growth stock to consider is Biomarin Pharmaceutical, a specialty biotech company. Despite a challenging launch for its gene therapy treatment, Roctavian, Biomarin's diverse portfolio of novel therapies remains strong. Biomarin focuses on developing treatments for ultra-rare diseases, which comes with unique risks and rewards. Drugs for these small patient populations often face little to no resistance from insurers regarding high list prices and typically have minimal competition. Even though Roctavian's initial sales were underwhelming, Biomarin's growth is being driven by its dwarfism drug, Voxzogo. Expanded use cases for Voxzogo led to a 74% increase in sales to nearly $153 million in the first quarter of the year. With increasing uptake and strong pricing power, Voxzogo has the potential to reach $1 billion in annual sales. Biomarin has also streamlined its focus on the most promising experimental therapies, reducing its annual operating expenses by up to $40 million. With more than half a dozen FDA-approved drugs in its portfolio, Biomarin is poised for double-digit sales and earnings growth through at least 2027. Analysts project that the company's earnings per share will grow from 87 cents in 2023 to nearly $5 by 2027. Number 4. Western Digital, ticker WDC. The fourth growth stock to consider is Western Digital, a leader in storage solutions. Despite some weakness in demand from the consumer segment, the company is benefiting from several strong trends. One major catalyst for Western Digital is the AI revolution. While artificial intelligence poses challenges for some businesses, it drives demand for high-compute data centers, which in turn increases the need for data center storage solutions. Additionally, enterprise spending on cloud-based platforms is still in its early stages. As cloud adoption grows, Western Digital's data center storage products will become increasingly important. In the fiscal third quarter, the company's cloud segment saw a 29% year-over-year increase in sales. Western Digital's transition to NAND flash memory solutions, which offer higher transfer rates and lower power consumption than traditional hard drives, is another positive factor. As NAND flash memory becomes more widely adopted, the company's pricing power and market position are expected to improve. Finally, Western Digital's financial outlook is promising. After reporting a loss of $3.59 per share in fiscal 2023, analysts expect the company to achieve nearly $8 in positive earnings per share next year. This turnaround, driven by growth in cloud and AI, makes Western Digital a compelling investment for the future. Let's dive into some key stats for these stocks to give you a clearer picture. Meta Platforms stands out with a staggering market capitalization of $187 billion and an impressive gross margin of 81.50%. Its stock price ranges from $465.13 to $474.36 today, reflecting strong investor interest. Fiverr International, though smaller with a market cap of $969 million, shows high growth potential and a notable gross margin of 82.53%. Biomarin Pharmaceutical, valued at $15 billion, focuses on niche markets with its specialty biotech products, maintaining a steady gross margin of 76.81%. Lastly, Western Digital, with a market cap of $24 billion, is navigating the tech landscape with a current stock price range of $74.68 to $76.89 and a gross margin of 15.66%. These figures highlight the strengths and opportunities each stock offers, providing a solid foundation for your investment decisions. As we conclude, remember that these four growth stocks, Meta Platforms, Fiverr International, Biomarin Pharmaceutical, and Western Digital, represent some of the best opportunities in the new Nasdaq bull market. Each company has strong fundamentals and is well positioned to benefit from current market trends and future growth. But before we wrap up, here's a question for you. Which of the four stocks mentioned do you think is the safest long-term investment and why? Share your thoughts in the comments below. If you found this video helpful, please like and subscribe to Simple Investing Secrets for more insights and updates. And as always, this video is for informational purposes only and does not constitute financial advice. Thank you for watching, and we'll see you in the next video.